All right, what's going on? Welcome to the channel. In this video, we are going to be breaking down 7 steps that you can follow along if you're looking to get access to a business loan. Now, the whole purpose of this video is because I understand that people that typically watch my channel come from all walks of life. I have some of you guys that message me that tell me, hey, I've been in business for over 10 years. I have over 15 employees. While I have other people that message me asking me the same question where you possibly just started your business. And so my goal with this video is to keep it as simple as possible. And again, give you 7 steps that you can follow if you're looking to get access to a business loan for your business. So let's go ahead and jump right into the first step that I want you to know, and that's this. You want to understand the importance of a detailed business plan. Now, most banks, and typically banks, unless you're dealing with more of an SBA type of product, they're typically not going to ask you for a copy. Does this give you a license to just fast forward past this part of the video? No. Here's why. If you're dealing more with SBA loans, they're typically going to want to see a more formed or well-established business. And so with that, they may ask you for a copy of your business plan. I want you to have a detailed business plan more for you. I can't tell you how many times I'm speaking to an entrepreneur that I'm coaching inside of the Inside Inner Circle, which is our coaching program where we help clients get access to business credit. And I'm asking them, hey, so what are you looking to do with some of the funding that you get? So let's say our target is $250,000, business lines of credit, business credit card, business loans, like whatever it is that you need for your business, because every business is different. You know, tomorrow that money gets deposited into your account. What are we doing with it? And sometimes I'm speaking to entrepreneurs where they just have no idea what they're going to do with the funding. Are they going to put it into a real estate project to maybe acquire or lock down better properties? Are they going to maybe go after rental properties? Are they going to fix and flip a property? If I'm dealing with construction company owners, are we going to maybe increase the payroll so that we can add additional staff? Are we going to get better equipment? Do we want to get vehicles under our business's name? Like, what do we want to do with the funding that we get? And so I want you to take this time, if you don't already, create yourself a detailed business plan, because it's going to help you understand what you're going to do on the back end with the business credit and the business funding that you get access to. The second thing that I have here is you want to gather financial documents for your business. I want to slow this part down because this will vary on the type of product that you're trying to get. And so there's essentially 3 different elements or 3 different routes that you can get when it comes to business loans, which is the whole purpose of this video. So I want you to put aside business lines of credit because that's a completely different ball game. I want you to put aside business credit cards because that's a completely separate ball game. I even want you to set aside any type of invoice factoring or MCA loans, because that also would be a completely different subject. For traditional bank loans or traditional credit union loans, again, if you're looking to use it for construction, or if you're looking to use it for real estate, or if you're looking to use it for e-commerce, the 3 pillars are typically stated income, which is going to be on a full doc. That means you want to have at least 2 years of tax returns. We'll come back to this one here in a second. You have a partial doc or partial stated, and this is going to be 1 year of tax returns. Another way that we say that is low doc loans. And then the final aspect or the final pillar that you have is no doc loans, where this is just full stated income. So you have 3 of those options. Which one should you go for? And the answer to that is going to depend on where you are in the maturity of your business. With those full docs, remember, you want to be in business for at least 2 years with taxes that you filed, because they will be verifying maybe the income that you're reporting on the personal side and on the business side. They will be verifying, hey, do we have articles of organization? Do we have our LLC in place? Do we have articles of incorporation? Which, by the way, you should actually have those for all 3 of the business products that you have. But in terms of just the financials, it's mainly going to be for a full doc, 2 years. For a partial or low doc, it's going to be 1 year. And then what do we do if we have maybe just started a business, right? You can maybe take a look at, when I say started a business, you're under 6 months, you're under 1 year, which typically you're not going to have any tax returns. At that point, you'll still have the traditional, hey, I still have my articles of organization, I have my LLC, I have my EIN, my business credit is still intact, my personal credit, or I'm building my business credit, my personal credit is intact because it's going to carry the majority of the load for the funding that you're going to get if you're taking the no or low doc route. Now, In terms of the amount that you can get for each of them, it's going to vary. Typically with the no doc, it only goes up to about 50K, right? And I use that loosely because 50K for a startup is a lot of money. So 50K is typically where it caps out at, which is the total maximum that you can get for that one product off of stated incomes. So that means is if I say, hey, I'm projected to make 100K in business revenue this year, I technically don't have to provide any financials for that. Now, if I am moving more to a bigger loan, which typically with low docs, they usually go up to at least 250, is usually where they cap out at. Some banks are different. Some banks cap them out at 150, right? And then with full doc, they go up to $1 million, $2 million, sometimes more than that. But at that point, I am showing financials. So I want you to think of it like this. If there's ever a situation where you want to show financials, it's going to be because you're going to get more money on the back end. Do not be afraid to show financials, especially if you've been running your business the right way. We need to get out of this mindset. We need to get out of this mentality that we need to take all the deductions that we can off of our taxes. Obviously, this isn't tax advice, but there is a time and a place where we want to do that. Just understand that whatever you do to one side affects the other side. And in this case, it's the amount of money that you can get if you're filing and you're keeping a track record of everything properly. The third item that we have here, the third step, is you want to determine the loan amount and the purpose. Again, banks are going to ask you, okay, how much funding do we need to get access to? What's the purpose of this funding? Now, be very careful, especially if you haven't established a business relationship just yet with the bank, which is important, is sometimes they'll ask you questions to see if you're considered more on the high risk side. We've done a ton of videos on this already in the past. I won't touch on it too much in this video, but you want to pay attention to, hey, what are we going to be using this funding for? Is it for payroll? Is it for working capital? Is it to buy better equipment? Again, this goes back to the first step that I gave you, which is you want to have that business plan set in place because it's going to help you when you're looking to get access to some of these higher limits. The fourth item, the fourth step, is choosing the right bank to work with. This mistake I see quite a bit with entrepreneurs. And again, whether they have been in business for 1 year or been in business for 10 years. And I see this quite a bit, at least until they come into the program with our Inside Inner Circle members. And we start to kind of show them, okay, hey, you may want to maybe go to this bank specific to your business or your line of work because they're a bit more lenient and they're a bit more laid back with maybe the type of products that they offer. So you're more likely to get approved for a business loan here, or you're more likely to get approved for a business credit card here at this bank versus whatever you see, especially happens a lot on YouTube, right? You'll see maybe a review on a credit card or on a business loan, and you'll say, well, if that creator or if that person talked about it, then it must be good, right? And sometimes, again, depending on the business or the line of work that you do, it may not be seen as the highest purpose or the highest chance of you getting approved for, again, that business loan. So I like regional banks, right? Those are pretty much banks that are located just in subsections of the country. So if you have maybe M&T Bank, those are only located in a couple of states. You have Truist Bank, those are located in maybe less than 40 states across the country. But then you have maybe credit unions that you can get access to, right? With credit unions, those right there are really relationship based because they see more of your relationship as, hey, this is a business owner, or this is a small business, or this is a company that we want to help, again, with cash injections, cash value with some of these loans, that they can go out and pump these dollars back into our local economy and continue to ramp up our economy. This is more so how credit unions think. Think of credit unions being for the people. There's a time and a place for big banks, but if you're just starting out and you want to get the biggest bang for your buck, I would not sleep on credit unions, and I really wouldn't sleep on regional banks. The fifth step that you want to pay attention to is make a compelling case to the bank. Another way that I usually tell this to my clients is we want to tell a story to the bank when we are presenting it. So remember, number 4 was choosing the right bank to work with. Number 5 is you want to make your case compelling. And again, this is why it all leans back on having your business plan. Even if you don't show them that paperwork, have it written out so that when a banker sits in front of you or a relationship manager, hey, so, and this is an important question, so you may want to write this down. Hey, how much top line revenue do you think this $40,000 loan is going to add to your business in the next 12 months? That's typically a question that they may ask. Or, hey, based off of where you're at in your business, how much funding do you think you need? And based off of the funding that we get you, how much revenue do you think that's going to add in terms of percentage to your business? Is it 10%? Is it 15%? Is it 40%? Is it 50%? If you start to kind of fumble these things around, they may see you like, hey, maybe this business owner isn't as established as they should be. And so that's when you start running into those denials. That's when you start running into those pending reviews that just take forever and then you don't get approved altogether because, again, they see you like a business that's kind of like dabbling, and they see that as a big risk to them. So what they do to you is, hey, let's just go ahead and put this on pause. You can continue, and you know the spiel, right? You can continue to bank with us, open a checking account, open a savings account, and we'll get back to you, or you can try a plan later. That's not what you want to hear, which is why I'm making this video, so that you can prepare yourself and prepare your file to, again, increase those approval odds. Number 6 is being prepared to provide collateral. Now, this typically happens more so with bigger businesses, and so collateral, in a sense, is going to allow you, kind of like how you would with providing bigger financials like profit and loss statements, bank statements, payroll, bankroll, or even if you have, again, those tax returns, is going to allow you to access higher amounts of funding. Off the top of my head, I believe that Fifth Third Bank typically caps out non-collateralized loans to about 100K, if I'm not mistaken. I don't have it in front of me, but around 100K. And that's typical to most banks, right? But again, they could provide, or they could ask you for things like taxes. They could ask you for the last 6 months of maybe your bank account in terms of how much funding is coming in, because cash flow is important, right? So there's a couple different side steps that you can take. But in terms of collateral, it is going to allow you to, again, take out a much larger portion, $250,000, $500,000. This could be things like business vehicles. That's why it's important to get things in your business's name so that you can take advantage of these types of strategies if this is the route that you want to take. Things like business vehicles, business equipment, heavy machinery. Maybe if you have certain equipment, if you run a restaurant, and you can still kind of collateralize some of the equipment that you use in a restaurant, just off the top of my head. And some of the more, I would say, common ones that you typically see is real estate, right? Where they would take a look at the loan, or they would take at the value of how much more so that property or that piece of equipment is assessed for, and then you can kind of take a loan against that asset, or you can secure that asset. This is known as secure funding or secure lending. You can secure that asset, and then on the back end, you can take out a certain portion. Again, every bank plays around with this differently with their algorithm. You can take a certain amount for how much you want to get access to. So again, that could be $250,000, that could be $500,000, that could be $1 million, $2 million. You get the gist of it, right? And then the 7th and final piece to all of this, and this is important because without this, it's going to make it a lot harder when you want to go back to that bank for additional funding, especially as you're going through multiple funding rounds, which we usually tell our clients that, you know, we set them up for, and we usually prepare them in advance. Hey, if let's say we go in to the bank, we go in for a $65,000 business loan. We then go back in for a business line of credit, let's say $40,000, because that's revolving, right? We're now up to about 105, and we can go back in for, let's say, a business credit card, and that'll put us, let's say, at 130, 140, as an example, right? And that's just off of one bank. Every bank has its own lending limit exposures, but just a good case study, something that you can kind of keep in mind of what you can do with your business is you build out that relationship. So maybe you know the main banker there that handles all the business credit applications. Maybe you have access to relationship managers, which we usually tell our clients to go through. If they don't have one, we send them through ours because it allows them to kind of fast track that relationship so that they can get access to additional funding a lot faster. Maybe you already have been banking there for 4 or 5 years on the personal side. You opened up your business line of credit, or you opened up your business credit, maybe application for your business account, right? So now you have that line open in addition to the personal side. Guess what's going to happen? That's when you start getting those offers on this side that you typically wouldn't get if you were just a brand spanking new customer, right? So that's essentially the 7 steps that you want to pay attention to if you're looking to get access to a business loan. Again, there's a lot of moving pieces in here. And so if you want to execute this correctly, you want to rewatch the video, and you want to make sure that they're all aligned and they're all like this, all together, right? Because if one piece is off, that's when you start facing those denials. So if you found value in this content, consider hitting the subscribe button down below. Join the official community. Don't forget that anytime I'm not posting on here, I'm posting over on the Insight with Irv channel, which is our podcast out channel. So if you like what we have going on over here, You'll love what we have going on over there. Once again, I appreciate you guys checking me out. Till next time, everyone, I will see you in the next video.